Hey everyone. Ford reported fiscal year 2023 first quarter earnings results that the market liked. The stock was up a couple of percent following the earnings announcement. So in this video, I'm going to go through the big picture highlights of those earnings and try and get an idea, provide some insight into what's going on with Ford stock. I know some of you are attracted to Ford because it pays a healthy dividend. It's moving into EVs. So it's been an exciting stock, so I wanted to shed some light on it. So let's get into it. Revenue in the first quarter jumped by 20% to 41.5 billion, with the adjusted earnings per share soaring by 66% to 63 cents. The macroeconomic factors have been favoring Ford. Supply chain shortages industry wide for legacy cars have allowed companies like Ford to produce only the most profitable models and then sell them at the highest prices without offering very many incentives. And that's been boosting prices, boosting revenue, boosting cash flow, boosting earnings. And it doesn't look like it's going to end. At least in the next quarter. I know Ford did mention that for the rest of the year, supply and demand is going to come back into balance. So it's not going to be so much in favor of the car companies towards the end of the year, but that remains to be seen. I think the industry really likes the way things are right now, and I don't know how quick they're going to be to go back to the way it used to be, where dealerships were offering discounts, five to $10,000 off MSRP, even more for some models. And more in recent years, in the recent year or two, they've actually been charging above MSRP. So I think everybody involved, except customers, really likes it. I don't know if they're going to change that very much. The company did announce they spent $3.5 billion on an investment for a battery plant for EVs. This is true for many of the car companies, even GM announcing billions of dollars in investment to transition into EVs. Thankfully, their legacy businesses are generating so much cash and profits, they're able to divert some of that into these massive investments. They're scaling the Mach E capacity, that's Ford's electric SUV, to 200,000 units this fall, and the Ford Lightning, which is its truck, the F-150 electric version, to 150,000 units by this fall. So by the fall, they're going to be at a pace to deliver 360,000 units of those, and by 2025, they're on pace to deliver to produce, I should say, 500,000 electric trucks per year in 2 years, in about a year and a half. So the same is true for GM. They're really ramping up production on EVs as well. And I'll take a moment here to speak about the EV production capacity increases. I mean, you're looking at Ford, GM ramping up significantly. Then you've got the EV only companies like Rivian, Lucid, Tesla, NIO, BYD, and other Chinese car companies really ramping up supply. So, supply side, EVs are really ramping up. There is a risk that there might be an oversupply coming in the next couple of years. That remains to be seen. And there is that competition is already causing many of these companies to generate a lot of losses in that segment and a lot of price cutting going on. Ford recently announced another round of price cuts on the Mach E. Of course, Tesla has cut prices, I think, 8 times in the last 3 months, and other companies have also cut prices. So, a lot of competition going on in the EV segment, kind of like the opposite of what's going on the legacy side, where I mentioned these car companies like the way it is right now with shortages in the market, companies selling cars at above MSRP, and really restricting production to the most profitable units and really maximizing profitability in those segments. It's the opposite in the EV segment where everybody is just saying, hey, let's put in billions of dollars, let's increase supply as much as we can, and if we need to, let's cut prices, let's go to war with each other. It's interesting to see that bifurcation in the car market. Speaking of which, Ford's legacy consumer car segment generated 2.6 billion in operating income with an operating profit margin of 10.4%. The EV segment, however, generated an operating loss of 700 million. The Ford Pro segment, which includes software and financing, that generated an operating income of 1.4 billion. So the rest of Ford's business generated $4 billion in operating profit that it can afford to send off a little bit to the ramping up the EV segment, which generated a loss of 700 million. Ford has a lot more room to even increase investments in EVs. Management is forecasting 2023 operating income of 10 billion at the midpoint with free cash flow of 6 billion. So Ford is looking really healthy, looking really strong. Of course, the macroeconomic factors are helping the supply chain shortages, selling these cars at higher prices, at making only the most profitable models of each of their cars. So things look good for Ford, and the stock is not really expensive either. So if you're attracted to Ford stock for the dividend, yeah, I don't blame you. It's looking okay. And especially if you're thinking about capitalizing on EVs, if you look at the EV only companies like Rivian, Tesla, um, Neo, and others, I mean, they look expensive compared to these companies like Ford and GM that are trading at forward price to earnings ratios of around 5. And they've got these legacy segments generating billions of income that they can use to invest in their EV segment, whereas the EV only companies, especially the ones that are not yet at the scale of Tesla, essentially, Rivian, Lucid, and a few others I can't think of off the top of my head, but they're losing money on the EV segment and they don't have anything else to supplement, so they need to go to the capital markets to raise money if they run out of their, they did raise a lot of money to begin with, but I don't know. I'm more of the opinion of if you want to capitalize on EVs, I'm liking going towards the legacy car makers like Ford and GM instead of going to the newer companies like Tesla and Rivian because of the much cheaper valuation, and you're getting the legacy segment that's going to throw off billions in cash flow to feed the investments in EVs. All right, but that's all I've got for this video. I hope that sheds some light into what's going on with Ford stock and the dividend, and if you're interested in the dividend stock. All right, thank you so much for watching. If you like what you saw, please subscribe. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.